Hi everyone, this is Vishal from Recon Capital. Currently we are looking at the chart of Nifty Spot and this is the monthly time frame. We can see that the prices are trading above the dual moving averages, which is a good scenario for the markets. But apart from that, market is facing a strong resistance level at 83 to 83.50, which is a 61.80% retracement of the entire fall of 2015. Along with that, this particular candlestick cluster is also posing a serious resistance to the market. So for any big rally in the market, considering the monthly time frame, the Nifty spot has to close above 83.50. Before that, it would be a bit difficult to see any big rally in the market. Let's analyze the weekly time frame. In the weekly time frame, we can see that the range of the previous week was extremely big thanks to the Greek exit day. We saw a big gap down and markets recovered in the late afternoon. The prices are taking support from the dual moving averages and also from the 23.6% Fibonacci retracement and a small candlestick cluster which had appeared in April and May of 2016. So what else interesting we can see in the weekly charts? Well, one most important thing which I can see over here is that in the September of 2015, Nifty spot had made a high of 8336 and lately we made a high of 8294.95, which means that the high of September was higher than the high of June. But the stochastic oscillator shows a lower reading in September of 2015 of 62.90 and a higher reading of 95.26 in June of 2016, which shows a clear-cut hidden divergence in the Nifty spot chart. Let's analyze the daily time frame. In the daily time frame, we can see a big hammer on the day of Greek exit. The question is now, is a short-term bottom being formed and should I consider this hammer for buying in the market? My answer would be no, because we were not in a downtrend. It was just a gap down on an even day and the market took supports from important support level and we have just bounced back. My analysis says that there is a big problem if someone is thinking that would be a big upside in the markets as of right now. There is a high possibility that markets could go range bound and lots of stops could be triggered on the upside or on the downside and lots of intraday volatility would increase. So as a trader, it's very important to keep your leverage and exposure extremely low, and if at all we break the lows, we break the recent lows of say 79.25 or 7900 and sustain below that, then there could be some serious downside in the markets. That's all for right now. Trade well.